Time for another stock review. This time a very quick one. It's a Santa rally. I got a silly hat on. What does that mean? Nothing really. Don't read anything into it. It's red. Is it going to go down? We're going to find out. I've got Senzi on the line. Senzi is going to give me a quick chart analysis. I'm going to look at the fundamentals. I'm going to read the balance sheet. I'm also going to look at all the ratings and the latest news and so on and so forth. Shall we do it? Tap the like button if you approve this message. One of our members from the Netherlands just said, can you have a look at this? And I thought, oh, what the hell? It's Christmas, isn't it? It's Christmas. So without further ado, because Senzi may have to run, I'm going to drop Senzi straight in now, and Senzi is going to give me a chart on this, and then I'm going to give my fundamentals, and we can work out whether you should, choose favour on this, whether you like it or not. Senzi, what does it look like to you?
Thank you, Martin. I've just had a very, very quick look. I've identified the market structure. We had that 2020 low. We went on that massive bull run. Then we had a capitulation, a very, very quick drop. That drop took us down to 178, and we've been sort of trying to recover since. This has formed a downwards trending trend line. This red line you see on the screen now, that's that downwards trending trend line. We are now breaking out of it, which is good news. So let me show you the levels. The level down here is the previous all-time high in 2019. It's a support in 2019 before it started going on that bull market. COVID brought it back down. It made that low again around the 173. It then went on its bull market, capitulated down back to this trend line at 173, and then more recently it's held a support at 173 again. So it's a very, very important level. It's a very good value zone because it's a lot of tech companies. You see that you can't even see the 2020 lows anymore. It's much higher right now. We're not even that much higher from the 2020 lows. So it's held a base around there. Now we're seeing this red trend line, this diagonal downward sloping trend line is being broken out. So the momentum is shifting on this stock. We have the 236 Fibonacci level at around $300. That's the next target. You break that target, you're looking at 449. That's the 50% retrace. Then you're looking at the 786 at the 605. So right now this is looking like a nice bullish structure. The bottom has held. The trend line is broken out. You've got a solid base at $173. And now it's time to start taking out previous highs and Fibonacci zones. These are all resistance levels: $300, $450, $605. But it's looking like the tide is shifting for EPAM, and we might get a bull market forming again. So for me, the chart is looking bullish.
Thank you very much, Senzi. And now I shall put my spin on it. It's a special, a full technical chart analysis, you name it, the whole works we're providing for one of our members just because it's Christmas, right? EPAM Systems. This is the overall chart over time, up 1,740%. You can see it's a very volatile stock. It's a trading stock. It's not a buy and hold stock. No question about it. It's a trading stock. It's very volatile. Full information. Let's start simple and let's build into it. EPAM engages in the provision of digital engineering, cloud and artificial intelligence enabled transformation services. The firm combines software engineering with customer experience design, business consulting, strategy and technology innovation services. Where was I? Looked away then, looked away, services, blah, blah, blah. Anyway, it operates through the North America and European geographical segments. The company was founded by Leonid, Lozner and Arkadiy Dobkin in 1993, headquartered in Newtown, PA. All right, let's go into some further information. Let's look down here. It's got 53,000 employees. If you're buying it on margin, it's 50% margin maintenance, so it's just second to the S&P level, so it's relatively low risk, even though we've got that volatility built in. 14 billion market cap. The price earnings ratio, 32 times earnings. That's the lagging indicator. I will look at the forward indicator in a moment and see if it's good value to buy it. Scroll down here. Morningstar saying a buy and a hold. No one's really saying sell. However, Morningstar, of course, they are paid to say this. What are the bulls saying? The bulls are saying EPAM could be acquired by Accenture, earning a significant premium on the current share price. That is interesting. That is a catalyst. The bears are saying EPAM could fail to keep up the R&D, research and development necessary to maintain the the quality of its engineering services. Okay, let's have a quick look at Robinhood investors. They've been selling the stock predominantly, not too bothered about what they're doing, but I am interested in the hedge funders. Hedge funders have been selling more than they've been buying recently, and these are significant buys. They're not just cash, they're not just tax buys. You can see that from the scale of the stock and the scale of the purchases. You know, it's interesting. Insiders not been doing very much recently. A little bit of trimming, no one really buying. Well, after the dawn becomes after the storm comes the sunshine. We've seen no real buying, but we have seen very small amounts of selling. That could say we have buy-ins coming soon. Fair value 218. I will do my own research in a moment and tell you what I think the fair value is. See if that's a fair value and it's fair or not. Pardon the pun. Earnings, well, you can see they've been outperforming Wall Street. So Wall Street aren't very good at regulating this stock. They don't really know how to get it right. It did outperform in Q3. Q4 is slightly better, so we could be in for a nice little beat here, expected in February the 20th. If I get a lot of interest in this stock, I will cover it. I will create an own playlist for this one right now. But anyway, that's just the basic stuff. We're going to go further in a moment. Who buys this stock? PayPal, Adobe. These tell you who other Robinhood investors of what they're buying. Gives me an idea of how the stock will trade. Some good, some not so. A bit of a mixed bag here. A lot of old school money. That's always good to see. A few risky ones, but no Mullins, no Lucids. We don't want to see scam stocks in there. We don't want to see any of that. Okay, there's the basic information. Now let's look at it and see how it compares, which we always like to do. Next, we like to compare to the S&P. If you like this information, please do tap the like button. This is normally a paid review, but it's Christmas, so we want to do something special for our new Dutch member today, just because we can, right? Tap the like button and consider subscribing. It really helps. If you put $10,000 in the S&P, and $10,000 in EPAM back in 2015. So we've got 9 years of growth. This is the result. EPAM is in blue and the S&P is in green. Now, what we're looking for is volatility and reaction to certain macro conditions. We can see EPAM here dropped off dramatically, more than the S&P in COVID 2020. So we know it's susceptible to a pandemic. Now that's important. We talk about these things a lot because if it does this, then it'll give us indication of what it will do when it recovers. This is why we don't like Peloton. This is why I didn't like Kavana. I didn't like toilet roll. Whoever was selling toilet roll, because all these things are just they're things that can't continue. Everybody started buying toilet roll, and then we ended up just having enough toilet roll, and we just didn't buy any for a while, and then we just bought the normal amount. All right, so we're not looking for stocks that just do well and then they fall away. We're looking for consistency. All right. But as we can see here, after COVID, the S&P continued upward again, and we got an acceleration with EPAM. All right. Did it ever go below the S&P over that time? In other words, did it ever underperform the S&P? That's very, very important to see if it underperformed. It didn't since 2015. But remember, the benchmark has been going for many years. This is not that much to compare to, but nevertheless, it's always outperformed the S&P. But this was a big moment. This here, we want to know what caused that. And this is a brief review, so we don't know what caused that. We'd need to know what caused that, and if we know what caused it, we can look to what to avoid. We had a spike right after that. Whoever bought it here did very, very well, right? Very well indeed. That was a great time to buy. But it's consistently held above the S&P. So 10,000 would have given you 51. You 5x'd. You 5x the S&P 500. You've 3.5. That's 3.4. So there you go. That tells you how it's performed against the S&P. Now we need to look at some analysis. Seeking Alpha analysts don't pay any attention to. I'm a Seeking Alpha analyst. Don't pay attention to me. I just have an opinion. Okay, I might be right. I might be wrong. You decide. But a lot of people on Seeking Alpha are just YouTubers trying to promote stuff. So I don't care what they say. I'm not interested in what they say. But I do care what Quant says, the AI unemotional software. That says hold. I do care about Wall Street because they're the ones that can move it. They said buy. Let's look at the short interest. Despite all of this volatility, its short interest is only 1%. No short squeeze possible. You have to have at least 20% with extremely high volume. We have neither. So no short squeeze. Don't buy on that basis. I showed you the PE ratio, and the PE ratio going a lagging indicator was 32 times earnings. Sounds expensive. It is expensive. 32 times earnings is expensive, but compared to Tesla, compared to Palantir, it sounds cheap. What's interesting though, and this is where the stock in my mind becomes a potential buy, if I go back over here and I look at this, we can see the forward PE is 23.27. Now, because we had Sensei as a guest on, I had the alerts turned off, and we just had the person that asked us to do this, who we decided just to do it full on. It's just given us a wonderful super chat, but it wasn't recognized because of the fact I was hiding the alerts. So I'm just going to play this alert for you just as a thank you to our guest from the Netherlands. He just gave us a whopping $25 super chat. There it is.
Ken Van Riel donated €25 through a super chat.
Thank you both. Thank you both. You're very welcome. Thank you for your wonderful super chat. That's very much appreciated. So I've shown you a bit of the information on the indicators and the analysis. The word I'm looking for is, I will find it, the factor grade. Sorry, that's what I meant to say. I'm going to come back to that now. This is what I want to show you. So the forward PE is good. The forward PE, I think I nearly missed it, didn't I? 23 times earnings. So actually, a growth stock suddenly gets a little bit cheaper. In other words, it's growing, it's doing well. Sensei supported this and said it's possibly a chance to buy here. From a technical point of view, and now I'm saying it's a time to buy from a fundamental, but I haven't, before you rush out and buy it, I haven't got to the balance sheet yet, so hold your horses, just a few minutes, but it could be a potential buy here. If we look at the valuation, it's improved. It's improved from D plus to C minus. That would support what Sensei's saying. Growth, D plus, down from D. Okay, growth slowing down. Profitability, B. Hopefully that will give us a good moat and a good margin and a good balance sheet. C plus, momentum improved, and revisions, B plus, down from A minus. Still pretty good though. Only thing that concerns me is growth, but it's improved slightly, D to D plus. So it's nothing bad about that at all. What about the latest news? The latest news around the stock, Accenture. EPAM Systems. Now, this is just out. I say just out. When I made this video, it was 6 days ago. 5 days ago. Accenture EPAM Systems gain on back of Goldman Sachs upgrade. We've got an upgrade from Goldman Sachs. Accenture and EPAM Systems were in spotlight after Goldman Sachs upgraded the IT services company on an improvement in the outlook for next year. Accenture shares rose 1.5% in pre-market trading, while EPAM tracked on 2.5. Now, knowing how this trades and knowing what it can do, and looking forward and knowing forward with the growth that we've got. Looking at the past chart, listening to what Sensei said, we could get a really nice rally on this. I've just got a message in the chat. Ken Val, is that what caused the big drop? Okay, could someone repeat what caused the
Ukraine.
Big... What, sorry?
With Ukraine caused the drop.
Ukraine?
The war.
The war in Ukraine. What's their connection to Ukraine? Can you tell me?
I think they trade in Europe a lot, so I imagine the war with Ukraine. Well, that was a catalyst to drop to make it capitulate, is what my understanding is. And Ken is saying it had a big impact. The war in Ukraine
makes sense. The CEO's from Belarus. Okay, makes sense. We've got the war about to end, even though it's not good. Even though I hate to say that, I think Donald Trump is going to throw Ukraine under the bus. The war's going to end, but basically Ukraine's going to give away half its country to Putin. You imagine America agreeing to do that. It's the end of the war. People will stop dying, but the people that died, half the country was given away. I don't know how they're going to feel about that, but that would be good for this stock. If that's the case, if that's what you're saying, we see. So there's another good thing. Thank you, Sensei, for bringing me that through, Ken. That was great. We see a gradually improving demand environment for IT services heading to 25. We all see that, and if we had the war end as well, there's a connection there. I can see how that would benefit. And are now more constructive on the sector. Analyst James Schneider wrote in a note to clients, we think industry headwinds in this largest industry vertical, such as financials, are abating, and we expect discretionary demand to pick up over the course of 2025, given a more benign regulatory and interest rate environment. That's another good thing, as well as the impact of pent-up demand. Okay, pent-up demand would indicate an overselling due to a macro condition as well. That's how you can translate that. Let me look at the fundamentals then in more depth. Undervalued by 8%. Undervalued by 8%. That's what we're seeing right now on a base case. We're heading to best case, 32%. So far, from what Sensei have said, the news you've talked about, the language in that news I talked about, the upgrade from Goldman, the forward PE, the chart analysis, Sensei. So far, this is a buy from me. Worst case scenario, 15%. I can overpay 25% for a growth stock, which this is. So we're happy. There's no warnings here. There's no warnings of this intrinsic valuation. Revenue is all up. And I'm going to stop you at this point. If anyone is liking my alpha spread and seeking alpha, we're in the middle of black sale extended discounts. Every one of my members with that referral in the chat and below in the description can have a free trial, lifetime discounts, massive discounts on alpha spread, seeking alpha. But if that's out of your budget, we have alpha spread as well on my members. I know I've got a relationship with the CEO. All of my members get a lifetime discount, which basically makes my membership for free. That's what you're looking at right now. Okay, up 0.3%, steady growth. We like that. No S-curve though. Operating income up 7%, net income up 10%, expecting a big jump. Nice. Financing cash flow up 6%. Nice. Investing cash flow down 43%. Very nice. Operating cash flow up 5%. This is definitely a buy from me as long as the balance sheet makes sense. And I wait for that. I'm not jumping yet. 4.5 billion in assets, cash 2 billion. They are cash rich, a bit too much. I prefer 1 million, 0.25%, 25%. They've got cash makes up 46%. You might go, well, what's wrong with having loads of cash? Cash should be working, not sitting around. Otherwise, you just buy DJT, a stock full of cash. It doesn't make a great business. They've got some cash, which is good. How much debt have they got? 4 billion. That's the right ratio between liabilities and assets. Go to liabilities. Long-term debt, 25 million. Nothing. 25 million. 2%. Oh my gosh. 2.8% long-term debt. Any short-term debt? No. Okay, it's a definite buy from me. Definite buy from me. Gross margins, 31% gross margin, good. But what is the net margin after expenses? Operating 12, 10% net margin. There it is, and recently up. 10% margin in this sector isn't the best. It's not Nvidia, but it's a workable margin that keeps the wolf from the door. FCF margin 12%, good. 15%, yep, good. 18% ROIC, good. 10%, yep, good. I like it. Balance sheet, I haven't seen it yet, but I know it's going to be good. There it is. Balance sheet, great, but balance sheet without solvency, without profit is nothing. 57% down because of what's been going on. It's a buy. It's a definite buy from me. No short interest. Let me see what Wall Street say. 23% worst case scenario. What I would do, I don't mind that. If I've got $1,000 and I go in with, on this stock, I would go in 80%. I would go in 80%. 50% would not be enough because I'm bullish on this. I would go in 50% on this one. And then if it drops like, 10%, I just dump the whole rest of it in. Now I'm fully in. So I've reduced my margin a little bit. I've reduced my average a little bit. I don't care about margins, but I've got the stock a bit cheaper. I can live with that. But the upside is 1% on the average. But the which is obviously not that great. But Wall Street's upper limit is 23%. But look how they've completely missed on this every time. All the earnings, they've underperformed, underexpected what the stock has done. So I would add 5% to that. I would go 50% all in, wait for a dip, get another 50%, or go all in. That's up to you. I'd never go all in on a stock when I first start. So there you go. We've had some very small sell-offs recently. No big deal. What comes next? The buy-ins. EPAM, talk to me.
EPAM Systems, which is an enterprise software company for platform engineering and development. Now, the stock's come roaring back, it's part of the return of the enterprise software primacy over hardware. EPAM's strength is a green light to buy Salesforce and ServiceNow. Buy. The two biggest enterprise software plays that I like.
There you go. Buy from Jim Cramer as well. But bearing in mind, Jim's very often wrong. So take it as you will. So I'm going to wrap up my analysis on this one. I've told you where I think you should buy it, how much you put in allocation-wise. It's a buy from me. Thank you very much indeed, Ken Van Riel, for bringing that to us. This is absolutely fantastic. So I will be putting this out as its own video. I would imagine this sort of stock, we will rank very highly for this. I doubt if many people are covering this stock. So I'll create a playlist for it. So I like it. We'll create an own playlist so we can cover the earnings. If you do a $5 super chat and you want the earnings, we'll cover it. But there you go. It's a buy from me. Sensei is still on the line, so we'll go back to Sensei in a second. Click above my head for all the links down below in the description. Over here, I shall put the EPAM playlist. We'll create one specifically for EPAM. And down here, my full alpha spread playlist for all the stocks I've reviewed. Way over 200. I think it's more like 300. Until next time, as always, take care of yourselves and each other.